Hey, what is going on, crypto people? Central banks just printed more money in the last 24 months than the entire last decade. Your dollars are melting fast, yet three asset buckets have consistently outrun this fiat debasement: Bitcoin, a select slice of crypto or digital assets, and the tech heavy NASDAQ index. Tonight, we'll unpack the data, the into the cryptoverse data, to see if you're holding these particular assets. Are you ready to stop bleeding on your purchasing power? Let's get into it. Happy freaking Saturday to each and every one of you. Something's going on with the live stream here. Let me refresh to see what's good. I appreciate you guys checking it. It is Friday, right? Sometimes I think it's Friday. Sometimes I think it's Saturday. I think it's Saturday, isn't it? I think it's Saturday. Saturday. Yeah, it is Saturday. I forget what day of the week. I'm having way too much fun. I can't even remember the day of the week. It was nice to see the portfolio looking sweet yesterday. XRP kind of doing some crazy stuff. So I could swear someone said it got up to $2.97. I don't remember that. I don't think XRP got that high. But in any case, are you holding these particular assets? Are you in these particular asset classes? Notice how I said Bitcoin, a select slice of crypto, and then the NASDAQ. It's actually three asset classes, three separate asset classes. Rachel W., how are you? She says, hi, it's Saturday. Thank you. Appreciate you checking in. So we're going to get into that. We're going to talk some stuff about that as well. Listen, this is inspired by a video interview I watched today with Raoul Paul and Julian Patel. I got to tell you, you got to check it out. You definitely want to check that out. Guys, do me a favor, hit that like button on the way in. That'd be really, really awesome. We always like to have just as many likes as we got viewers in the stream. I appreciate you guys being. It did. XRP hit $2.97. When? When did yesterday? PA Stars checked in. Yep, $2.97. I did not see that. Wow. I didn't know it got that high. Okay, cool. As Crypto Eddie said, she said $2.96. I didn't know it got that high. Cray. In any case, we're going to get into it. We're going to go over the market as well, but definitely appreciate you guys hitting the like button. We always like to have just as many likes as we got viewers in the stream. It helps to get people, get the channel out to more people out there that do not know Rachel. They don't understand. They don't know that there's a new asset class being built right underneath their nose. They don't know that they're coming up against the central banks and the debasement of currency. They have no, they don't understand that their wages are not going up, and certainly not going up enough to cover the debasement of about, we like to say, a hurdle rate of about 12%. They don't know because they're not in the digital asset space. It doesn't matter which crypto they hold. They just need to be in this game. I'm going to share two videos with you guys today. One with Raoul Paul and Julian Patel, where they were being interviewed on this podcast, and another one from a BTC Prague conference that I think personally is incredible food for thought. Incredible food for thought if you're open. The real big Will, what's going on, my friend? How are you? What's good, fam? Says the real big Will. Will, you good over there in Tejas? Yeah, we're good. Yeah, we're good. We're good. We're good. Thanks for asking, my friend. Thanks for asking. We're good for sure. I appreciate you asking. We were safe, thank goodness. But I just got to tell you, these two videos, I'm eye openers. I'm gonna go over the market real quick. We're gonna get into these two videos because I'm really gonna just let them play. I'm not the video editor. I don't clip stuff, but I'm gonna let a few minutes of the Raoul Paul and Julian Patel, and then the latter part of that video, I'm gonna play those minutes, and then I'm gonna play this clip um, from the BTC Prague that I think, again, is seriously apropos. I really, really do, and I hope you guys we'll leave with just something to ponder, something to consider, for sure. All right, so let's, since the market's kind of doing a little something, let me refresh CoinGecko first, and I'll share the screen. I mean, it's just, it's doing a little bit more than just doing what it does. So Let's share it. Okay, I refreshed it. Let me share the screen. Uh, I did not see that. 297. Hmm. All right. I think I'm glad I didn't see it. All right, share. I'm trying to think. What's 90% of $26? Yeah, someone let me know what that is. 96 for 26. That's all right. So according to CoinGecko, the total cryptocurrency market cap is down nearly 4% in the last 24 hours. How about that? And is at 3.74 trillion. The Bitcoin dominance, the live Bitcoin dominance. Let's take a look at that and see what that is. I apologize. I should have refreshed that. 64%, 64.6%. You know, we got to leave 60% to begin to hope for the alt season, the wild, crazy alt season that we're looking to get. All right. So Bitcoin is trading at $117,531 again. And on the 30-day, Bitcoin is up 13%. Ethereum is trading at $2,947 again. And on a 30-day, Ethereum is up 18%. XRP is trading at $2.76 again. On the 30-day, XRP is up 30%. Solana is trading at $161 again. On the 30-day, Solana's up 12%. Dogecoin's trading at 19 cents again. And on the 30-day, it's up 15%. And so the beloved Sui, is trading at $3.40. On the 30-day, Sui is up 14.7%. 14.7%. Let me what do I want to do? Let me go here. Let me go yeah, let me just do that. I think that's okay for now. You know, pull this up for you. Guys, do me a favor, hit that like button on the way in. That'd be awesome. And if you happen to be in that 55% or so of people that are hanging out, listening to and watching the Crypto Siege, do me a favor. If you've been enjoying those hangouts, please consider subscribing to the channel. And don't forget to ring that notification bell so that you know whenever we go live or whenever we upload a video. So let's see. Got that. Let me do this while we're waiting for this thing to upload. Let's see. Man, computer's slow. Let's get rid of that. Yeah. Oh man, what is it? Saturday? I mean, it's kind of late, right? It's 9 o'clock Central, 10 o'clock Eastern time. I would think the internet would be a little better. All right. Let me go here. Let me pull this up real quick. Someone had 31 points. And the Summer G League, was that Coop? All right. Let's see. Let me pull this up here. We're going to get into that. Get into this video real quick because it plays a while, and I think it's important to kind of get this. Well, on this channel, we're big fans of Raul Paul and Julian Patel, the data that they give, the information that they give, the insights that they share for free, for the most part. Big time stuff that people pay some significant numbers, pay for this type of research, and they provide it a majority of that for free to just regular everyday folks like you and I. But Raul Paul and Julian Patel are being interviewed on this channel called Forward Guidance. It's a really good back and forth. Again, I'm going to just let this play 5, 6, 7 minutes or so, and then we'll talk about what they have to say, and then I'm going to share like the last 4 or 5 minutes and talk about that as well. All right, so let's go back here. All right. Now, what were we saying? People were saying that, okay. All right, I got it. Let me share a screen. And I'm going to share the sound. Share.
You have no clue what it means when the world is 400% of GDP in debt. And even Elon, who can solve going to Mars, can't solve this. If I'm to allocate to the S&P 500, I'm basically breaking even versus debasement. Diversification just destroys returns now because you've got one clear macro factor. It's also the same factor that is driving P ratios that drives everybody nuts. But I think it's becoming pretty obvious that AI and robots are replacement humans. And this is the bit that gets contentious with people and they hate it.
Nothing said on forward guidance is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. All right, everybody, welcome back to another episode of Forward Guidance. And I'm super excited today to have the dynamic duo, the dynastic duo too, Julian Patel, head of macro research at Global Macro Investor, and Raul Pal, who needs no introduction, but I'll give it anyway. Real Vision, GMI, XPAM, everything. Guys, great to have you on the show. I'm really excited to have the three of us here. What's going on?
Yeah, it's great. We've never done this before, where Julie and I have been interviewed together. And you're the perfect person for it, so it should be a lot of fun.
Yeah, excited.
Appreciate it.
Super excited.
Yeah. The way you guys just chop it up, I really love it. And honestly, selfishly, I just wanted to insert myself and just be a part of it with you guys because I love the shooting the shit style. I love the back and forth. So yeah, it's just perfect.
Excellent. Let's just do it.
Yeah. Let's shoot the shit.
Let's do it. Cool, guys. Well, why don't we start from the top and just level set a little bit on. You guys do a lot of work around debt refinancing cycles. You call it the everything code, the business cycle, the liquidity cycle, and how they all co-integrate together and just how fundamental the shift has been, especially since 2008. And I think the frameworks that you guys have developed have been very prescient. So I would love to just...
We're going to get through this. We're going to get through it.
Pass it to both of you to just kind of set the foundation here for the discussion and just level set on where things stand today here, first week of July.
Yeah, I'll take the big picture part is, look, from our work, we kind of noticed the business cycle structure. We're both business cycle analysts. We've both been looking at them for a long time. It changed after 2008 and it became like a metronome every 4 years. That's only happened once in the past, which was the 1950s and 60s. Where it became very, very cyclical. But this is perfectly cyclical. And it got me thinking for a while, what the hell? So many of us didn't understand what happened to asset prices after 2008. We kind of knew quantitative easing was happening. We kind of knew stuff, but we didn't figure it out. And what I suddenly realized is that in 2008, we had a debt jubilee. And in fact, it was just forgiveness on interest. You don't pay interest payments. Remember, we did that over COVID, exactly same mechanism, no interest payments. So no interest payments allowed every government who had basically, they'd all gone over 100% of GDP in debt. So all economic activity, all economic growth was used to paying of debts. So what they all did was basically restructure their debts between 3 and 5 years, creating an almost perfect 4-year cycle. And then when you look at the debts today, we're in that 4th year now, where the final part, the larger part of the debt is due. And what we found is they start injecting liquidity over a period of 3 years, reaching maximum liquidity. That liquidity injection never really gets taken back. Some gets taken back in the bear market years when they're withdrawing liquidity, raising interest rates, trying to slow the economic cycle because of inflation or whatever. But over time, liquidity keeps rising. It's rising at at a rate of about 8% a year. And that is, in fact, the debasement rate of fiat currency. And what happens is, and this is the bit that gets contentious with people and they hate it, if you divide an asset by the global liquidity, you get to see whether it's outperformed. The debasement.
People hate that chart.
Oh, they hate it. But it is the best chart in the world because it then tells you, okay, if I'm to allocate to the S&P 500, I'm basically breaking even versus debasement. So the S&P 500 is not really adding much value. Well, when you look at the Euro...
I forgot to make sure the sound was good. What's going on, JR? How is the sound okay? Can you guys hear okay? Let me know. Should be good. I didn't hear anyone say anything. But yeah, please let me know in chat. I'm going to continue on. What's up, JR?
Stocks and other markets, which are priced in their local currencies, you put them in dollars, they look similar. They all the markets look very similar once you adjust for debasement. So that was interesting to me. Gold, complete almost flat line, really, versus debasement, as it should be, right? That's gold's job, it's to be the stable currency. And once we looked at the world through this lens of the debasement of fiat currency, which again is still contentious, becoming less so nowadays, but it was really contentious when we started it, we realized there's actually only two assets that outperform this. One is tech stocks, and the other is crypto. And so that completely changed how I allocated and how I understood tech stocks. I was a macro guy. I hated tech stocks. They're always too expensive. You're always a value guy. And I realized none of that made sense in this market. That's why the value investors have been getting killed, is what had happened was all of this. Now, what is driving this? And I think, Julian, if you can just bring up those demographic charts, because these are the absolute most important charts in the world, really, to understand. GDP growth is driven by this magic formula, which is debt growth plus population growth plus productivity growth. That's how you drive trend rate of GDP. Now, debt growth's gone to extremists, and now really we're just servicing debts. Basically, GDP keeps falling, and it's falling over time, the trend rate of GDP, because of the magic formula. And Julian, if you can get to the demographics charts, because they're the key ones here. The issue is here, the biggest secular factor in all of markets is this one thing, is the aging of population. And we can see the births rate is falling in the US, much faster elsewhere. So that obviously is a function, the labor force participation rate, the size of the workforce, is a function of births, deaths, or the number of people being born, whatever, right? And you hear the phrase demographics are destiny. They are, until the AI and the robots come, which are basically artificial humans. This is the problem that faces us all. But there's a way that they've got around this. If you go to the next chart, is they've increased government debt to offset the declining growth from the population. So part of the magic formula was the debt growth and the other was the population growth. So they've used debt growth. This chart, nobody understands, and it's never been copied on X, which is the bizarrest thing because it's the most incredible chart of all, which basically says that all government debt growth is basically a function of labor force participation rate. Now, what's interesting is then, okay, so the debts keep going up. We know the forward look of where the labor force participation rate is going to go, and how it's being funded is liquidity. This is Fed net liquidity. You're probably better to use US total liquidity because that includes the private sector, because they're now using the banking sector. So what they're doing basically is debasing currency to pay for the debt. It's as old as the hills. It's as old as the story of economies. It's as old as the story of money. And it's happening at a very pernicious rate of 8%. So you kind of notice it, but don't notice it. But what's happening is asset prices keep going up optically because the currency is getting debased. Even if you look at real estate adjusted by the debasement, by liquidity, it's basically a flat line. but wages are a variable input. And so what you find is that wages do not account for this. It's also the same factor that is driving PE ratios that drives everybody nuts. Why are PE ratios going up over time? Because the P goes up because of debasement. The E is a variable and doesn't. So it always goes up in line with debasement. And we've shown that over time too. So this is the really big picture of what we look at. It allowed us to understand there's only two assets to own. And then we got to a further realization, which is, okay, if 97% of all of NASDAQ's price action is driven by debasement. It's the strongest factor we've ever had in any macro regime in history. Okay, great. That makes macro super easy. For crypto, it's 90%. So we've basically got a factor that's so powerful that nothing else matters. Brilliant. So then let's take the NASDAQ. If we've got one force, one economic force, we take the NASDAQ, we divide it by the by Bitcoin, it's down 99.97%.
Down.
So you kind of get one asset allocation only, which is crypto, which is bizarre. In a macro world, we now think you need concentrated portfolios as opposed to diverse portfolios. In fact, diversification just destroys returns now because you've got one clear macro factor. So that's really what we're doing. And then we spend a huge amount of time working on the business cycle and the various components of all of this, how it comes together and where we are in timing of that.
And just to reinforce some of what Raul said, Felix, if you want to pull up this chart on the NASDAQ, I mean, this is including dividends. So this is total return in excess of, our GMI, total liquidity composite. And you can see that it annualizes around 13% in excess of the real rate of debasement. So that's the point, is that 8% is the hidden loss of value from central banks essentially debasing their currencies, which weakens the currency in all financial contexts. And then the visible rise of, let's say prices at the supermarket is, as we know, inflation, right? So you have to kind of bolt that on. That can be 2-3%. But the point is that in real terms, the NASDAQ's making money. In real terms, Bitcoin, if we look back to, 2010 or so, is annualizing around 150%. But if we compare it more recently with the NASDAQ, it's around 95%. So that upper white box you can see in the left-hand corner. But then, as Raul said, if you look at the NASDAQ in total return terms versus Bitcoin, again, since January of 2012, when we're based to 100, it's down 99.94%. And so
since 2012, let me get to this chat right here real quick. Rachel says, sounds good. JR says, it sounds good. Since 2012. So when you just look at the NASDAQ, it's making money. It's beating the debasement, right? Certain NASDAQ stocks, mainly the FANGs, right? Bitcoin is doing the same thing. It's only better. But when you compare Bitcoin and the NASDAQ in terms of return on your investment, the NASDAQ is bleeding minus 99%. That is massive. And it doesn't mean you don't own the NASDAQs and tech stocks. Doesn't mean that. But in comparison, what are you doing? And I think it's very, very interesting what Raul Paul said there. He said, concentration is really, 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 really going to be important for sure in a particular asset class. But let's continue listening on. Julian has some really good stuff here.
To the point that Raul said, in real terms, nothing. If you look at the red box, these are the annualized numbers since 2011 or so. But essentially, nothing's accumulating purchasing power outside of, let's say, U.S. large cap, NASDAQ, and ETH. But that's in real terms. In nominal terms, even U.S. large cap equities like the S&P 500 are not compounding purchasing power. It's literally just tech and crypto, and tech's down 99.94%. And then there's also this gold thing I think is really interesting because Raul's right. Gold's.
So I see here Bitcoin, Ethereum, Solana, annualized 134%, Ethereum 121%, Solana 153%, and the NASDAQ looks like it's 17%. He X'd out SPY, the US large caps. That is very, 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 very interesting. And again, it got it 2011 all the way up to 2025. Wow. Very, very, very interesting. In 2021, Solana had the highest return. Then something, I don't know what DBC is. What is that? I have no idea what DBC is. In 2022, then 2023, Solana, 2024, Bitcoin, 2025 is saying GLD. Cumulative, it's Bitcoin is the winner. Annualized, it's got Solana down here, which is interesting. So this is really, really good data chart. Let him continue talking here.
It's done its job, but then you have this whole basket of people who are, quote unquote, gold bugs. And the really interesting thing about gold, and it's had a great year this year, but if you look at the annualized return going all the way back to whatever it is, 1950s, 1960s, is gold has made you richer, or sorry, it's made you money, but it hasn't made you richer. You see what I mean? So it's like a nominal illusion because you've actually made money, but if you adjust for the rate at which central banks are debasing their currency, you're actually losing purchasing power. So that's the point, is like cash, gold, everything outside of crypto and tech, you're actually losing purchasing power over time. And that's a dangerous game, especially since 2008.
And once we discovered all of this stuff, the hard pivot I took to completely focus on it. I mean, we never look at them, but never have trade recommendations in emerging markets, FX, anything anymore. And I used to do all of it. I'm like, it's irrelevant if 97.5% of all of it is driven by one factor.
Yeah.
Never been
I remember the shift that you went through. Like, you were trying to just knife catch bonds for so long. And then it's just like, oh shit. Like, yeah, things have changed a lot.
That's right.
Yeah, it's an interesting. So this framework you guys have has kept you on the right side of risk.
So I'm going to stop this. Let me do this. Stop the share there. I'm going to leave this link to this video. Oh, no. I'm going to play the last part of this as well. Let's see. One banana zone. Yeah, let me go here to win banana zone. So just think about that for a second, about that particular asset classes that he's talking about there. That's actually the only ones beating the fiat debasement. There's a video out with Warren Buffett just recently talking about that's what nations do. They just ultimately, their goal is to debase the currencies. There's Warren Buffett, the bank guy, fiat guy. Hopefully I can find that video. All right, let's go back here.
I will just ask you, like, what's your 3 to 6 month view here?
So I think, when we come back to the idea that, markets and economies have become perfectly cyclical such that this extremely colorful, many people, can't even probably see the summer thing, but, these 4-year cycles and, things like liquidity cycles, obviously that then means you get 4-year cycles in crypto and 4-year cycles in tech and just about everything else. And so the question is, okay, well, we're in the 3rd year of a 4-year traditional cycle. And you're going to say, and so if we look at those orange bars, be it fall, 2013 was a great year. 2017, that was the year Bitcoin did a 23x off the January lows. And you're like, all right, well, 2021, what was that? And that's what Raul and I call, Bitcoin's truncated cycle. And that's, again, where we are today in 2025, but not truncated. Why? Well, because what happened in March of 2021, liquidity, this is the net liquidity flow, peaked in March of 2021 and went down in this straight line as basically everyone tapered liquidity flow, right? Guess what else peaked in March 2021? The business cycle, right? Whereas when we're looking at today, right, so liquidity's growth, like looking at a 12-month low, is basically just turned positive, right? Which is, you can say BOJ, ECB flow. And then the ISM is still, below 50. And then had we been sitting together, doing something like this back in March 2021, this is what we would have been looking at. So the ISM was at 63.8, and our forward-looking indicators were saying that the ISM was about to go down in pretty much a straight line. Well, this is where we were back then. Here's where we are today. I'm just going to do that one more time. Where we were back then and where we are today. So we're in a very different environment. This is basically suggesting that like Q2 of next year, the ISM gets to, let's call it the mid 50s. And so the point here is that because financial conditions have eased as much as they have, Felix, I mean, even with rates stable, dollars come down, which is the dominant factor in this index, at least, given the size of the move, it's actually extending. We believe it extends the business cycle outside of what a traditional 4-year cycle would be. And what we also know is that if this is right, and the ISM moves to, let's say, the mid 50s by, call it Q2 of next year, well, that once the ISM gets above 50, right, and then moves into its sort of late cycle peak, call it anywhere around 60, this tends to be where we get these really big moves in risk assets, and crypto included. It's also where we see alt season happen, right? Which is really what people are saying win banana. And the win banana, we're up 600%. I mean, the banana zone is not a 1 month get rich thing, right? It's, Bitcoin's up 600% since we set a low in Q4 of 2022. That's, been a steady banana zone, but the question then is, when is the next leg? Well, we'll get the next leg as the ISM progresses towards 55, because the thing to think about this is just like a credit spread, right? It's just like small cap versus large cap equities, which once you get into Bitcoin, which ETFs will be the large onboarding there. You got to think about that as like the way I think about that is like the gateway drug to crypto. So even if you're making, good money in Bitcoin, all of a sudden, if you're already orange pilled, right, and you're seeing something going up like Pepe or Bonk or Sui or Solana or whatever it is, you start to recycle those tokens very similar, like you'd be taking profit from a large cap growth equity at the bottom of the cycle and recycling it into small cap value and EM equities. Does that make sense?
Yeah,
and so
totally.
The economy's in a very different place, and the forward setup in terms of financial conditions looks good, but then also liquidity is rising. Okay, so here again, total liquidity, the 6-month flow is actually broken out of this kind of the range that we've been in. And that range that we've been in explains a lot of what has basically driven these knee-jerk reactions in crypto. The trend has been higher, but there's been, periods of time like the first half of last year, or even, the first quarter of this year, where basically we were just, kind of stuck in a range, which feels like that again now, but it's not the case, I don't believe. But so we still think here's as we call it, the most copied chart in the world when it comes to Bitcoin. But I still think that the point with this, and Raul and I have said this repeatedly, even though, you've got people on Twitter who are monitoring this tick for tick, it's not about that. It's about the direction of travel and the fact that the trend rate is still growing. And when you then look at the year-on-year comps, it's just kind of another way of thinking about this or looking at this. And I think that this very much paints the forward setup. So yeah, when you compare, as I said, the 2021 cycle versus the situation that we're in now, and we've both said that liquidity and the business cycle are the two most important drivers of risk assets, and that also applies, to Bitcoin, the entire crypto universe, that these two elements are going to head higher over the next, let's say, 12 months, whatever. Into Q2 of next year.
And so, just using the liquidity framework, the business cycle framework, the financial conditions framework, it's all suggesting that the probability is, because they need to roll the debt, they're going to have to increase more liquidity, and this is just going to drive assets up strongly. And again, just so people understand why the business cycle matters for the ISM, if you think the ISM has been low, and then go and ask the average American running an average business in an average town, how are you feeling? They say pretty shit, right? People's earnings haven't gone up. Your mortgages are too high, your car payments are too high, etc. So what happens is when the business cycle picks up, there's more disposable income and businesses have more investment income, and that gets driven out the risk curve always. That's That is what markets do. That is the game. And altcoins, as Julian said, are no different than junk bonds, no different to all the other stuff. It's all the same trade. So it feels like it's all to come for us. We don't see anything that suggests it's not going to happen. And we talked about before, the size of what's happening with global M2 and the dollar moves and stuff like that are very big. So no reason to expect that the move in asset prices is probably more than people expect. And I think the inverse to the business cycle being so low for so long will be the flip side of this cycle will be longer than people expected, because we've got this slight dislocation still working through post-COVID that then extends the business cycle. We don't know yet, but it feels like it's Q2 2024 so far. But if financial conditions keep moving, if they really have done some sort of Mar-a-Lago accord and they get the dollar below 90, okay, then we're going on further. Maybe it's a full bubble cycle then. Maybe we don't get who knows? But one step at a time. But it looks good.
Well, and just to add one more thing on if you want to pull this chart, this is interesting, right? The ISM has been actually tracking pretty closely. It's kind of like the
So you guys get the point here. Let me copy this, put this in the live stream, in the chat for you guys as well. What's going on, Jackie33? How are you, miss? Hope you're doing well. Jungle Link's in the building. Jungle says, are we going to the moon? Yeah, bro. Yeah, we are. BML 37 sounds good. Thank you, man. What's going on, BML? How you doing? Appreciate you checking in. So look, in the end, at the end of that conversation, basically Raoul Paul said, look, liquidity go up, assets go up. Liquidity go up, risk assets go up. So that's what we're looking at. We're looking for the global M2 and that liquidity to continue to rise. And they have to inject liquidity because that's what they're using to manage the debt. That's the bottom line. It's the bottom line to it all. That's the bottom line. And there's a shot for quote unquote an extended cycle. Right now they're thinking Q2 of 2026. Right, there's a shot of that. Whether because of COVID and the events, they're kind of misaligned the the 4-year cycle. And by the way, the 4-year cycle is not a Bitcoin cycle; it's a business cycle. It's not about the halvening and all that. It's just the business cycle. Highly recommend you guys, if you have been enjoying Real Vision, highly recommend you check it out. You can check it out for free. A lot of great information in there. I think it's so hugely important to understand the bigger picture. So 3 assets that are outpacing, Fiat Debasement, Bitcoin, an asset class unto itself. The digital asset space, the altcoins, NASDAQ. NASDAQ is just barely beating the debasement, just barely. Bitcoin is crushing it by 90-something%, which is pretty good, which is awesome, right? Which is really, really good. And then it's a few select cryptos. They're changing the game there. You saw in that chart, it was Bitcoin, Ethereum, and Solana. Now, we're going to go to our favorite friend into the cryptoverse, and we're going to just check out some numbers in terms of if you lump summed or dollar cost averaged in from a period or time frame to see how they're doing. I'm going to pull that up. Appreciate you guys going in. What's going on, Jungle? Into the CRYPDOERSE. There's Crypto Siege over there. Loud. I'm gonna check out some numbers, just some food for thought. Shoot. I don't. Let's see. I have to get my login information here. Don't know if I have it or not. I'm gonna try and log in before I share the screen. Again, I think it's important. We're in the right space, but are you holding the right assets? We're in the right space. Oh, it worked. Cool. But are you in? There it is. All right. Let's share a screen. I didn't have to do my cool. All right, let's go here. Let's go share. We're in the right asset class, but are you holding the right assets? That's the question. Right? because not every single crypto in the digital asset space is outperforming and beating the debasement. All right, so let me pull this up, share the screen and go here. DCA strategies, Bitcoin DCA simulation. And we got to put, we got Ethereum, we got XRP, we got Solana. I'm going to leave SOE up there for now. How are they doing compared to Bitcoin? Remember, Bitcoin is the leader. Like a lot of people, I don't know. 600% since 2022. Do you got something like that in your portfolio? Have you been holding it since 2022? You know, I said this once, I've said this several times in the channel jungle. We became so enamored with that 2017, 2018 thing. It was like a drug. We got hoodwinked. We missed it. We got off track. We fell off the track and we forgot the mantra. We really forgot the mantra of the reason why we hold these altcoins is to get more Bitcoin. We fell off track from that. All right, so let me go here. DCA, just a little DCA thing. We're just gonna do $100 monthly, one time a month. We're gonna pick a time frame here. Looks like I got January of 2022 to, let me change this 2025 deal. I think it's only fair that we go to June. I mean, we're not really through July yet, so let's just do June. Did that work? I feel like that didn't change. January 1. I don't know if this is, why this, let me try this again. Let me do this again. ETH, XRP, Solana, SOE. Did it adjust that quick? It did. All right. Just an example. I didn't know if the June date took or not. I think it did take. June 1st. This is not, that's July 1st. Okay, that's good enough. July 1st. June 30th. So just a little DCA strategy. XRP, the winner at 275% PL. You invest $100 on a DCA strategy. Total invested would be $4,200. XRP, 275% PL, you would have made, you invested $4,200, you would have made $15,749. Solana, 237% PL. You invested $4,200, you would have made $14,193. Bitcoin at 192% PL. 4,200, 12,298 in ETH. 15%. Invested 4,200, you would have made 4,000. Your value would be $4,831. Right? Are you holding the right assets? Now you can do some CAGR if you want, some CAGR, some IRR, but that's on a dollar cost average strategy. And the reason why I do the DCA strategy, you can, and I'm going to ask you guys to, for your altcoin, you want me to put your altcoin in here and see what's good. The reason why I picked the DCA is everyone can certainly do it. We could also do, just do a lump sum. If I put $1,000 one time, would have been the best performer. I think that's more on the IRR than the CAGR, but in any case, 92%. What's this here? Current portfolio value, total invested 4,200. 12,298. Okay. 192%. Yeah, so that's the Bitcoin number there. Got it. So it's not enough to just be in the asset class. What's going on, Legendary? You got to hold the right assets. You have to hold the right assets. It's not enough to just be in there. Legendary says, I hope I have the right assets. If you got an altcoin you want me to check out and look into, I think 22, going back to January 2022, I think you want to have a nice time window, 2, 3, 4 years, but you don't want to keep going so far back, then it won't be as relevant. So I think that 2022, is a good range to check out, but it is what it is. There's XRP right now killing the game for sure. And we haven't really got to, Bitcoin dominance is still 64 something percent. I did a video the other day, Jungle, talking about this trader, Cameron Fowles, who's just a day trader, swing trader, whatever. He's came in from the stock world and, hugely successful. But he's been trading XRP for a minute, way back since 2017. And this is the first time his last 2 videos were where he actually, instead of talking charts and looking at the charts and talking crypto and hot cryptos, he talked the fundamentals. He talked the fundamentals of XRP. I was absolutely, he talked about Ripple and the Fed the bank charter and the Fed master account and the RLUSD stablecoin. Again, this is a trader. They don't do the fundamental stuff. It's the charts, baby. It's the charts. And when I saw him doing that like 3, 4 days ago, I said, yeah, XRP is about to take off. Because when you got a day trader, a swing trader, a trader talking about the fundamentals for why he's taking another position, yeah, that means it's significant fundamentals, right? For day traders like that, traders to talk that thing. Now, of course, his latest video was only 3 minutes. He's talking about, he's taking profit at $4 to $6, $4, $5, $6, right? Obviously he took a big position at 2 something, whatever it was. And, he's going to be out. That's what they do, those traders, right? He's going to be out at 4. He said $4 to $6 and he expects it to go higher, but that's not his deal. He doesn't, he's not going to say, oh, 200%, but I'm going to keep waiting, let it come down. Now it's only 100%. And then it's going to go out, but it's going to go up and then it's going to be 500%. He don't like that. As a trader, he don't like that. So he sees his 200%, 250%, dude's out. He don't want it to drop. He don't want to wait 3, 4, 5, 6, 8 weeks coming down to then go up more than 200%. He don't like it. He don't like it. So it's interesting. He said it. That's not my deal. That's not. He said $10. It could go up to $10, but that's not. I'm not going to do it. Interesting. Dan O is here. What's up, bro? Legendary says, just out of curiosity, can you punch Stronghold? Yeah. That's Stronghold, right? Let me find that, right? Legendary? I think that is Stronghold. I don't know if it's going to show up here, but we'll see. Nope, Stronghold's not in it's not in there. Can't check it. We got Shiba Inu. Let me put Sui in here real quick. Sui. Yeah, 51%. Sui's still doing better than Ethereum currently. Yeah, I can't track Stronghold, unfortunately, bro. Who else checked in? Did I miss anyone else checking in? So again, we're in the right asset class, but are you holding the right assets? You saw the chart from Julian Patel and Raoul Paul. There's Bitcoin, Ethereum, and Solana. There's a reason for that. There's a reason for those numbers. Let me do something real quick. We'll check with ChatGPT real quick. Let ChatGPT do his thing. There. Like, again, we're going to see what's going on, right? Jackie 33 says, very happy I converted all my ETH to XRP last year. Oh, I hear you. I hear you, Jackie. Right? Because, the markets, right, not everything moves at the same time, and it hasn't been moving. Ethereum hasn't moved since 2022. I was listening to the Bankless channel the other day, and they were saying, it's 2022. So, and that's, Ethereum is going to do its thing. The staking thing, the ETF, it's going to do its thing. Yeah, it's going to do its thing, but it hasn't, right? And so, what are people doing from 2022 to now? What were they doing? What were they doing? I share what I sold all my ETH. I put all my ETH into Solana, right? However long ago that was, over a year ago, and just in the time frame, right? It is what it is, right? And there's that money. Now, Solana's not going to probably do anything more than maybe 420, 450, something like that. I mean, I don't even know. But taking profit was nice along the way, right? So we'll see. We'll see what happens with Ethereum. I think this ETF thing, for sure. The Ethereum treasuries is going to do something. It's going to spark this market as well. I really, really do think that, right? Miguel Castillo, what's up, bro? What's up? What's up? Jackie 33 says she got some of that Solana, $8. Nice. You did really good. Miguel Castillo, congrats. Jackie 33. I'm taking small profits now with my XRP. LOL. I hear you, my friend. I hear you. I just took some, not much, like $4,000, but I just wanted to kind of position for some other things. But yeah, because this market's going to do something. Ethereum's going to do something for sure. Now, the other video that I wanted to share with you guys, again, I shared this with Raul and Julian to let you know we're in the right asset class. But are you holding the right assets? Are you holding the right assets? We talk on this channel all the time, Jackie 33. We talk about our 90% and our 10% bucket. We shared along the way how we changed our strategy because 90% of our portfolio was in assets other than Bitcoin. And we wanted to switch that around. And I really would say other than Bitcoin and Ethereum. We had both, but it wasn't weighted correctly. So we flipped it around and we just, sold this and traded that, right? And then we got a 90% bucket that's made up of Bitcoin, Ethereum, Solana, and XRP. And a 10% bucket in things like SOE and FLR and RWA tokens like Andu and AI gaming tokens like Super, right? That type of deal. Andu's got a token, now they got a chain. And that's all, if you listen to Virtual Bacon, all that kind of stuff where people are now getting their chains and getting tokens with their chains is because of new legislation that's coming down the line, and to kind of get themselves out of the security thing and into the commodity things with having a chain, having a governance token or a gas token associated with it, as opposed to being a token on something, right? It's a little different. You token, like, for example, Andu on Ethereum, right? That's not the same thing as the Ethereum blockchain and ETH as the native asset. And legislation looks like it's going to be really one of the the difference between that security and Solana is going to be something like that. The native asset of the layer one, if that makes sense. So, and that makes sense to me. Virtual Bacon shared that with me, and that makes sense. So again, we're in the right asset class. I mean, if I put other assets that are popular, and that have been popular, and I put them there into the cryptoverse from 2022 to 2025, from January 2022 to January 2025. How are they doing? I'm gonna do Cardano, and I'm going to share it with you guys. That's a pretty popular one, right? Cardano. Let's do Cardano. Cardano 18%, just a little better than. Let me share the screen so you guys can see it. Right, because the numbers are now, this is DCA. This is not lump sum. This is DCA, $100 a month. Anyone can do it. I think the DCA metric, I think it makes sense. Right? Everyone can do it. That's probably what most people are doing when they get into the digital asset space. They're just getting paid once or twice a month. They're buying some crypto, right? So we check that. Cardano is just above ETH at 18%. At 18%. Now that's from January 22 to June 30th, 2025, right? Really, really important. Now, what's another popular one? Take Cardano out of there. It'd be interesting to see how the BNB folks did. Let's check BNB before I get to this other video. BNB at 80%. Okay, not as good as Bitcoin, not as good as Solana, not as good as XRP. BNB 80% PL. 80%. And again, I don't, it doesn't make sense to go to 2020 and 2017, 2018. Yeah, but you need a time frame, I think, of at least 2 years. So I went 3 plus years to have a good reference. I think one of the things I say in crypto all the time is your particular asset making new all-time highs after each cycle? Are they making new all-time highs? It's not a lot of them that have done that. Really, really hugely important, right? Not a lot of them have done that. So again, we're in the right asset class, right? I don't have any NASDAQ stuff. I'm on the treasury thing right now. If I'm going to do anything over there in that space, it's going to be the treasury companies like Vivo Power for me. I think that's the next play. I think SPET is going to do well. I think the Bitcoin treasury companies have proven that works. I don't think those are long-term plays, but if you can snatch that 200 to 700 to 900% and carefully monitor that NAV, and right now, year to date, the strategies and the Meta Planets and the I think it's DeFi Solutions, whatever, those treasury companies, that stock is outperforming the underlying asset right now. It has been for the last, whatever, check the numbers since strategy started. But that is something important to note. Now, could that be because the alt's been ranging for however long? Yeah, but we're going to see the MSTR versus Bitcoin the next 12 months. We'll be able to check DeFi Solutions versus Solana the next 12 months. We're going to be able to check Vivo Power for XRP versus XRP the next 12 months. Which one you got? Which one's going to be the outperformer? Here's the thing. I think, why do you just have to have one? I have XRP and Vivo Power. Right? What am I going to do? Get NVIDIA? Right? $4 trillion. What am I going to do? NVIDIA? No, I'm playing the play right now, which I think it's the play. And I think institutions are going to say, this startup in the digital asset space, or these startups, these treasury company startups. I think they're going to go with the treasury company. The big money institutions, I think they're going to go by way of these treasury companies. You just look at the recent uptick in SBIT from SharpLink, you know, that Joseph Lubin dude. I'm trying to put aside, Jackie, I'm trying to put aside my angst, just disdain for that dude aside and take a position in SBIT. I haven't done it yet, though. I haven't done it yet. All right, let me pull up this other video that I want to share with you guys. This is, again, some really, really good, some food for thought. You're going to be like, what? You're showing us a video from this event? Why? I want you to hear this story and just think about something. Oh, that's a bunch. Yeah. Oh, yeah, okay.
And a few lines of code alter the course of history. And can one act of defiance ignite an idea whose time has come? You all know the legend, Satoshi Nakamoto, a hidden genius who launched Bitcoin into a world broken by 2008's financial betrayal.
By the way, this is not about Bitcoin. I'm not showing this about the asset. It's not what I'm sharing with you.
A trustless and unconfiscatable middle finger to all governments and banks that have choked us for centuries. A few lines of code that answers these questions with a resounding yes, and that became my lifeline when my own country's banks stole everything I had overnight. Let me take you there. A story of despair turned defiance, of a collapse that almost broke me, and a discovery that completely rebuilt me. Because for all of Bitcoin's promises, what happens when that seed lands in a place like Lebanon, where corruption doesn't just threaten your money, it erases your entire life in an instant? That's when Bitcoin stops being a story and starts being survival. I'll never forget the moment it hit me. It was 2019. I was standing in a bank line in Lebanon.
By the way, weren't we all here? Legendary Jackie 33, Pookie, if you're in here. Weren't we all there? We were all here for 2019. We all watched on X or on YouTube the bank runs and people losing their minds in Lebanon. And I get this sense that we think, yeah, that's a thing that happens over there. You know, that's a thing that happens to them, those people. That's not going to happen to us. And it's like they almost think that 2008 didn't happen or that 2020 didn't happen. It's like, yeah, but that didn't really happen, did it? I mean, the banks didn't just get away with robbery and no one went to jail. That didn't really happen, did it? And, well, we didn't see zeros on our accounts, but I remember grown men and women crying when I was at work. I remember them crying because they were, you know, within their little 45-day window of retirement, put in the paperwork and all the other stuff. And tragedy.
Country I'd always called home, a land of resounding beauty, yes, but one hiding a rotten core. The banking system had imploded, corrupt and reckless to its core, an entire house of cards that finally fell. I had worked for years Long hours, disciplined savings, sacrifices to build a future for myself and my family. I was financially comfortable. I had enough to live very well. And then overnight, it was all gone. The banks froze the accounts and the government shrugged as millions of people, teachers, parents, farmers, doctors, watched their entire savings disappear. Years of sweat and hope wiped out just like that. I stood there with hundreds of others, a sea of desperate faces, old men with trembling fingers, mothers clutching onto their kids, and young folks that had just started to build for their futures. We begged for our own money, money that we had earned, money that was ours. And they just looked at us through that bulletproof glass and said, sorry, there is nothing we can do. So one day, I had a secure future. The very next, absolutely nothing.
So anyway, I want to share a little bit of that right there. But I think the thing that one of the reasons why I wanted to share that is there is this sense over here in the States that things can't happen to us, that things can't just be, taken from us. The debasement of the currency, all the central banks are doing, all the nations to have a central bank, that is happening to them without question. We're in the right space, again, but do you hold the right assets that are winning versus the dollar and versus Bitcoin, versus the dollar and versus Bitcoin. This video is not about the asset. It's not about whether or not the central banks are debasing. That video, I'm going to put the link here for you as well, is about how are you leaving it to chance? How are you custodying your assets? We'll put it in the chat here. Because I hear a lot of people saying people are not going to want to manage their own stuff. People are not going to want to self-custody. They're going to want to go with an institution. And I'm concerned for them. I'm really, really concerned for people who are thinking that. I'm concerned for people who might be hoodwinked and bamboozled by what BNY Mellon is doing, what BlackRock is doing, what the banks, no one's paying attention to this, legendary, but what the banks have suddenly and subtly been allowed to do, which is custody our assets. It's not in our face, right? Because influence is subtle, right? It's the gentle nudge on your back. It's not someone body blowing you or, haymakering you in the back. No, influence is very, very subtle. Pretty soon, there's going to be on TV and in the news media how banks are custodying crypto and how there's some form of insurance for it. And people are going to be turning their stuff over under the guise that it's convenient, and you don't want to do that. You don't want to have to learn how to custody your own stuff. Let us do it for you. This is the thing that I'm really, really concerned for a lot of people. And it's so easy to just kind of fall in line to that mentality and thinking. Yeah, people ain't gonna want to do that, their own stuff. Wasn't that the sales pitch for why we put our money in the bank in the first place? Way back yonder, wasn't that the sales pitch? Today in 2025, people are going to their bank and depositing $25,000 and going back 72 hours later to withdraw their money, and they can't take it out. Today, that is happening. You understand that, right? That's happening today. They can't go 72 hours, less than 72 hours later. They go in, they just said, no, 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 no. I don't want to make an appointment to get my money. I didn't make an appointment to give you my money. I want to withdraw my money. And they won't give them their money. They keep telling them they don't have it because they don't. They've sent it off for other people to borrow against it, and they've sent it off in other places, invest in it. For when they get the profit, they get to keep it. And when they take the L, you take the L. They don't get to take the L. You take the L. I just wonder how long we're going to continue to trust that. And I don't know, Jungle, Miguel, are you catching how this little subtle thing that they're trying to do? They're trying it, they're doing it again. They're doing it again. I don't want to pick on a particular thing, but if you do something with an institution that is now regulated and has people overseeing it, like look, we need to be able to see these transactions and look at these transactions, and we need you to be able to, under this AML and KYC and anti-money laundering, and your assets are in that thing. Right? You're in that bubble, you're in that circle of the anti-money laundering, the AML and the KYC and the BSA, and this entity is in that. And you got your assets with that entity trying to get staking rewards. The stuff is either non-custodial or it's not. You're either relinquishing your keys or you're not. It's not yield. That's that you're getting or you're not getting. What is and is not is, are you releasing your keys or no? That is the question. I promise you, the hoodwink is 5% on your money, 7% on your money, insurance on your money, on those assets. That's the hoodwink. And you have to ask yourself, in my opinion, you have to ask yourself, am I releasing control of my assets? That is really, really, really the key, in my opinion. And again, it's so subtle. It's so sneaky how they're letting the banks, the stable coins, and letting the banks be able to hold these things. And I'm telling you, just a matter of time, 2, 3, 4, 5 years from now, they'll be talking about custodying your crypto. Let us custody your crypto. You don't want to have to deal with the hassles. And they're going to talk about, seed phrases and pass keys or whatever they call it, seed phrases and all that other kind of stuff. And the same thing happened with the banks. Boy, she's out over there. Let me put this back in here. That's the same thing with the banks. Mr. French checked in, said XRP is a fool's dream. Yeah, I hear you. I hear you. Call me a fool, friend. So, you know what I'm saying? That's the hoodwink and the bamboozle. Right? Right? I let the blue wrenches deal with that troll. But think about that. That's the key. Do you have control of it? Are we going to get lazy? And quite honestly, are we going to just let other people be lazy about it? Self-custody has got to be the answer. Self-sovereignty has got to be the answer. Because I'm telling you, the sleight of hand and that hoodwink is let us do it for you. Yep. And I'm speaking from personal experience. And it wasn't what's the word? Like people aren't waking up trying to keep your stuff. Right? People aren't waking up trying to keep your stuff. But when crap hits the fan, they'll be in a position to. Do you understand? I mean, I just wanted you to think about that for a second. That scenario with the $25,000. What kind of situation are we in right now where a person who deposited their own $25,000 72 hours later can't go take that same $75,000 out? What kind of dire situation are we in that they are allowed to say that and do that? There's no bank runs going on. And if they can do it when there isn't a bank run, there's no dire catastrophic situation going on. A dude just deposited $75,000 and said, you know what? I want to take this out. I'm going to go this place and I'm going to hop around in it with me and my kids, or I'm going to do something. It don't matter. Do you know they're asking people, well, what do you plan on doing with this? When you try to take it out, do you understand that? They're asking them. They're asking the customer, well, what do you plan on doing with your own money? They have to get a response or they won't give you the money. I just want you to think about that. Tony Rain says BlockFi anyone, right? And again, my mentor used to say to me, CJ, everything is good until it ain't. Everything is awesome until it ain't. Everything is good till it ain't. So when we're doing yield and staking and all these different things like that, I think the question we have to ask ourselves, and nothing wrong with doing DeFi and all this stuff, question we got to ask ourselves, am I relinquishing control of my stuff? And at least be aware of it. At least be aware of it. That's why we say if you got a certain asset and you got a bunch of that asset, and you want to get into DeFi, cool, but are you going to go 100% into an LP position with all your assets? Right? You wouldn't do that. But do you realize that most people today, and I did it, put 100% of the paycheck somewhere where they don't, the second they put it there, it's no longer theirs. That's kind of like 100% of the assets. For some people, all they have is fiat dollars. All they have is a paycheck. JR says we are in control of our own destiny. If we take that control, right? We got to take control. So again, I know it's a little self-custody rant, but I just think it's hugely important. If we begin to just accept people's, well, it's just too, it's too hard. I don't know. It's just, we just kind of begin to accept that for ourselves and for others. We're relinquishing control, relinquishing our self-sovereignty. Miguel says the problem is that most people don't know how to self-custody their crypto. Well, now you've identified the problem. What's the solution? Learn how to self-custody their crypto. I say this all the time. The vast majority of people learned how to self-custody their wallets. Do you remember back in the day? Maybe just left high school, maybe you went to college, or just out of college, or maybe got your first job, or maybe just out of high school into the military. You remember the times that you lost your wallet? Remember your younger self and you lost your wallet? And what did you do about it? Did you just stop owning wallets? Did you just stop owning the wallet? Got your got cash in. You remember back in the day when you used to have cash in the wallet? And bank cards, credit cards. Remember those days when you lost those wallets? What did you do? Did you say, well, I just can't learn how to not lose my wallet? Of course not. You figured out how to not lose your wallet. Right? Year after year and year after year and year after year, you got better at securing your wallet. What's the difference with crypto? What's the difference? There is no difference. You just learn how to do it. You learn how to do it. And you find yourself a system that suits you better. Some people it's going to be ledgers and treasures and flex. Some people it's going to be cold cards. Some people it's going to be tangent. The tangent wallets. I'm not saying anyone to go get a tangent wallet, but the tangent wallet comes with seed phrases and no seed phrases. Did you know that? What is the example of? It looks like a tangent looks like a little bank card. What's the difference between a tangent that has a seed phrase and a tangent that doesn't? The tangent that doesn't have a seed phrase is just like your bank card. Isn't that something that you're used to doing? Isn't that something that a vast majority of people are used to having in their wallet? And aren't those same people accustomed to not losing their wallet, Tangent gives you two options: C phrase, no C phrase. There are people in crypto who they shudder at the thought of not having a C phrase. They're like, no C phrase? No, man, that makes me too nervous. What if I lose it? That's what they say. What if I lose something? I need the C phrase. People are saying that. I gotta have this backup recovery phrase. What if I lose? Yeah. Yeah. And guess what? There are people like, ugh, C phrases. Write down this, that, and just keeping it this and that, waterproofing it and fireproofing it. There's this other option now. Don't need it. Right? You just learn. We can't have that as a reason. I don't know how to self custody or let other people have that reason. The answer to us winning is not just having the assets, it's having self custody of our assets. Because I'm telling you, the hoodwink around the corner, the wolf in sheep's clothing that's leaning around the corner, is the banks and institutions telling you that they'll take care of the assets for you, rid you of the hassle of self-custody. You know? Yep. Miguel says, no matter how much planning you do, you still lose your wallet. It still happens. You ever have those moments where you lost it? You're like, what the world? Right? I know people, they put certain cards in that wallets and they leave the rest of the cards somewhere else. Today. Yeah, I'm only bringing this one. I'm bringing this one. I'm leaving the other ones. I know people who just do bank cards and they don't bring their credit cards. I know some people who just bring their credit cards and they don't do their bank cards. It's just, what do we call that thing? It's security hygiene or wallet hygiene. Legendary said, I would freak out if I lost my wallet. It's headed towards biometrics. Eventually, your face and fingers will be your C phrase. Yes, indeed. It's going to advance. It's going to advance. It's going to get better and better and simpler and simpler. I think what Tangent is doing is pretty cool. But it's amazing to see how many crypto people freaking out all that idea. Like, they say it to them. They say on YouTube, I'm just more comfortable with knowing I have a C phrase. Think about that. Think about that. And if you're paying attention, you got a lot of Google signs ins and other kind of signs ins. And guess what? You already have a wallet. Yeah, that's happening as well. A few crypto platforms got it. You use a Google, you use some kind of email, whatever. You got to be careful with that, though. But you do have it, and you automatically got a wallet. It's a crypto wallet. You automatically got it. Automatically got a crypto wallet. No C phrases necessary. So we're moving towards that as well. And self custody. Just it's the mindset more so than anything. The mindset of, yeah, I can take care of my own thing. This thing that's valuable, I can take care of it. People don't let other people take care of their wallets for them now. What's the difference? I ask you, seriously, what's the difference? No one lets someone else take care of their wallet with the bank cards and the credit cards now. They don't let some other people take care of it. They take care of it. We can learn how to do it. Promise you. All right, fam. I'm gonna wrap it up. I've been rambling long enough. Keyless checked in and said, "Missed alive. Glad to catch the tail of it. Still evening, everyone. Hey, Keyless, how are you? I'm about to wrap it up here. I appreciate you guys checking in. Jankies, I think that's Jankies or Junkies. Biometrics will be implemented only because of those that aren't savvy enough to self-custody. I hear you, my friend. I hear you. And we can all level up our skill set to become savvy enough to self-custody. I'm telling you, the wolf in sheep clothing is around the corner, looking around the corner, just waiting for the opportunity to say, hey, why hassle with seed phrases and da 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 da? What if we'll custody it for you. We're a bank ABC VP, and you got all the D's and the D's and the E's of security. No, thank you. No, thanks. All right, fam. There it is. I appreciate you guys checking in. Happy Saturday to each and every one of you. It's been a really, really cool hang. Again, 3 assets that are outpacing, that are defeating the debasement of the fiat currency: Bitcoin, crypto, and the NASDAQ. The NASDAQ is barely doing it. Barely doing it. Bitcoin is smashing. Bitcoin is doing it big time, like 90%. NASDAQ only 15%. And Bitcoin is smashing the NASDAQ. And there's a few select digital assets that are outdoing Bitcoin. It's important to understand that. And I believe, Keyless and Rafi, I believe we became enamored by the 2017 bull run. And we forgot the mantra. I really, really do believe that. And the numbers and the stats are proving it out, my friends. It's just a handful that are outdoing Bitcoin. It's just a handful that actually have a new all-time high from cycle to cycle. Just 2 cycles. Can you imagine? Out of all the digital assets out there, tens of thousands, it's just a handful that have gone from a new all-time high to another new all-time high in cycle to cycle. Just 2 cycles. It's just important to understand that. As long as you can understand that and plan accordingly, 90-10 works awesome, baby. It works awesome with the capital A. Because you can still hang out with that 10%. Is FLR, is SUI in the 10%? It is. Is FLR for me in the 10%? It is. But I own them. Is Ondo in the 10%? Of course. It's in the 10%. What about Super in the 10%? Of course. But I own them. But it's not overweighted as compared to Bitcoin, Ethereum, Solana, and XRP, and a combination thereof. Some people, they're 90%. It's all Bitcoin. Some is all Ethereum. But they still have a 10% bucket. Some are all XRP, and they have a 10% bucket. Some XRP holders, more Bitcoin holders than anyone, ETH holders than anyone else. 90-10 kind of works good, kind of keeps you safe, still allows you to do things. I like it. It wasn't my idea, concept. It was actually from Raoul Paul, but I stole it and went with it, went with it. And it's been working really, really well. All right, fam. Thanks so much for hanging out. Appreciate you guys. Again, happy Saturday to each and every one of you. It's been a really, really cool hang. Do me a favor, if you didn't get a chance to hit that like button on the way in, please do so on the way out. It's one of the greatest ways to support the channel. And if you happen to be in that 55% or so of people that are hanging out, listening to, and watching the Crypto Siege, do me a favor. If you've been enjoying those hangouts, please consider subscribing to the channel. And don't forget to ring that notification bell so that you know whenever we go live or whenever we upload a video. I'm going to end this one like I do all my videos and remind you guys of this. Old money doesn't want you to win. But that's okay, though. Because you and I, we're already winning. And I would ask you to consider this or perhaps ponder the idea or notion of living your life permissionless. I'll talk to you guys soon. See ya.